The number of homes for sale in the entire country increased by only 343 homes last week. In the entire country. Could this mark the seasonal inventory peak for the year? That would mean there would be less homes on the market every week until potentially March or April of next year. Mortgage rates are still as volatile as ever, having more than a 0.25% swing last week with a peak of 7.33%. How are these high rates impacting buyers? Will real estate prices ever come down? And what does all of this mean for the Dallas real estate market? My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties. We're looking at trends, which cities and zip codes are the hottest if you may be looking to sell your property and get top dollar, as well as which cities and zip codes are the coolest if you may be a buyer or investor looking for a deal. We're also tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, and what's inventory looking like. And if you stick around until the end, it's my favorite part. It's the top 10 ranked charts of both the hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button so you don't miss it moving forward. And if you're looking to make a move in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is September 11th. Let's see what the data is telling us this week. And if this is an old video, you can click the playlist here and it'll take you to the latest weekly update. And as a side note, this week, I do have a little bit of a black eye if you can see it. I competed in a jiu-jitsu tournament here in Dallas this week. I had 5 wins, 3 by submissions. I brought home 2 bronze medals and 1 black eye. So overall, a great weekend. So let's start by covering that seasonal inventory decline I was just talking about. So it's definitely concerning that inventory only increased by 343 homes in the entire country this week, but 1 week does not make a trend. So we definitely will have to watch moving forward before thinking that this means anything serious. But looking here at our inventory line chart, we can see that in 2021, this is about when inventory started to decline for the year. Now, you'll notice by looking at 2022, we actually right here, it looked like we had topped out, but we ended up taking off for a second big increase in inventory, and we actually didn't finish until almost November, so late October. So depending on which of these 2 years you think is more reliable, we may have several more weeks of inventory climbing, or we may start to decline right now. But as always, we have to look at the full context of what was going on at this time. One very important piece of information you need to know is that this time last year was the first time that rates broke above 6%. It was around here. And after that, home sales just dried up basically until the end of January. So you've got to remember, home buyers were used to all of this, 3%, under 3%. And then right here in December of 21, rates took off and didn't stop until 7% all the next year. They basically just went up the entire year. So we had this big sticker shock where even the buyers who were looking at 3%, they may have been willing to buy at 3.89, 3.876. But by the time we started breaking up here, like if you were approved at 3% and now we're at 5.7%, the odds are you're going to sit on the sidelines thinking, well, rates are going to come down. We had a tiny drop here through August, and then immediately after we shot up. So again, what you saw in the 2023 line chart was inventory started to go up right here as rates broke 6%. And I believe the reason this happened is because all of this move happened so fast. People had no time to adjust to these new rates. They just said, I'm out, I'm gonna sit on the sidelines. And that's why inventory started to stack up. I don't think it's gonna be the same this year, because this year we started at 6.48. It's been a very slow climb compared to last year. So if you look, 6.48 to 7.12. This is a much smaller move up, and buyers have had tons of time. They've had most of the year to be adjusting to this move up. In fact, we've been at or above 7% rates for like 4.5 months now. So it's nothing like here. January 3.22 straight up to over 7%. That's not what's happening right now. What's happening right now is a slow and steady increase. Buyers have tons of time to adjust to these rates. Does that make sense? This huge, so again, right here, this is when rates went above 6% and they continued all the way up to 7% right here at the end of October. And we can see that here, October 27th, it hit again there at November 10th, but October 22nd, that was the end of that second surge up because rates started to come down again. So I hope you can see the correlation there. That's why I don't think that we're gonna have a second surge of inventory this year. Okay, let's move on to mortgage rates. We started last week at a 7.07. We hit as high as a 7.33. That is a huge swing, but we cooled off a little at the end of the week to a 7.22, and that's where we begin this week. This makes 18 consecutive weeks with rates around or above 7%. That's 4.5 months. Now, regarding mortgage purchase applications, we actually saw a 2% decrease this week. If you'll remember, last week we saw a 2% increase. That was our first increase in months as rates got closer to 7%. And then again, this week they jumped as high as 7.33, and immediately that cooled it back off, and we lost that 2% gain we had last week. So it's still very evident buyers are extremely rate sensitive, as well as rates are still jumping around like crazy. When rates get down closer to 7%, more people are applying. As they get up, like last week near 7.33, less people are applying. But this makes for a total of 15 positive, 18 negative, and 1 neutral print so far this year regarding mortgage purchase applications. Okay, we covered our inventory chart a little while ago, so I want to cover the new listings chart. Okay, as you can see here, new listings took a big hit this week. While it is expected that new listings will decline from here until the end of the year, we're hoping for much of a slower, steady, orderly decline like this. For context, this drop is about 10,000 less homes listed compared to last week. 10,000 less homes listed in the country than last week. But again, this is only 1 week. That doesn't mean a trend. It could jump back up next week, so we really need to wait for some more data to confirm this trend. But we definitely don't want this to continue down at this rate, or we're going to end up way, way, way down here, which would be terrible for buyers. And you also have to remember, inventory will be declining until the next spring season, which traditionally has been end of January, beginning of February when inventory bottoms out. But last year, it didn't happen until March or April. So if you don't like what's on the market now, there are likely going to be less and less options every week to choose from here until next year, as late as maybe March or April. And that doesn't mean that no great homes are going to be coming onto the market then. They still will, but it does mean that you need to be ready to go when they do. You need to already be pre-approved, already working with an agent, and ready to move on that house before it hits the market, or you're likely going to miss it. And all this is telling you is that there's no evidence to suggest it's going to get any easier to buy a home moving forward. As I say every week, if you can buy a house, buy a house. Don't try to time the market. It's a losing game. People are still buying, and there are too many buyers for too few homes. And if you're still on the fence about whether or not now is a good time to buy, please watch this video. Now, very quickly, we're going to run through the MLS data. Starting with Dallas County, we had 235 closed sales in the last 7 days. That's 79 less than last week. 297 homes went under contract. 451 were listed in the last 7 days, and that's 5 less than last week. 79 of the homes that closed were immediate sales, meaning they went under contract in the first week, and that's 17 less than last week. In total, there are 2,067 homes that are under contract or pending sale. That's 123 less than last week. Moving on to Collin County, only 140 closed sales in the last week. That's 130 less than the previous week, but 194 went under contract. 243 new listings, that's 26 less than the previous week. Of the sales that happened, 43 were immediate, that's 23 less than the previous week. In total, there are 1,756 homes under contract or pending. That's 29 more than last week. So basically, everything went down this week. And I'm not sure how much of that has to do with last week having a holiday on Monday. I haven't been tracking this long enough to know if that really makes any difference, but we'll definitely be looking for that moving forward. Okay, let's move on to housing data, starting with Dallas County. All right, if you've ever seen my videos, you'd know that what we use here is called the Market Action Index. It is this graphic. It just takes all of this data and puts it into one easy to read number. Anything below a 30 is a buyer's market. Anything above that, we're asking how much of a seller's market are we in. We spend less time on this every single week because it's just been a slow, steady decline as rates climb. The market index drops little by little, but I will say the median list price has actually been climbing here in Dallas for a few weeks now. Median days on market has been stuck at 35. The amount of homes having price decreases actually came down a little bit this week, but it's been up in the 40s for quite a while now. Inventory is still climbing, but it's so slow. I mean, 2857 up from 2805. So this line looks like a pretty steady increase, but it's actually a very small increase. So that's all you need to know. Last week we were at a 48.35. Now we're at a 47.56. And back in May 26, we were at 56.4, but rates have been climbing ever since, so we get this slow, orderly decline. Now, very quickly, moving on to Collin County, same thing. The market action index is a 46, and it's actually, I think, having a slower decline than Dallas is. But they also have been steady on their price for 3 weeks, well, 606, 599.9 to 600. So no change from the, well, $100 change from the last week. Their median days on market, however, finally broke out of that 35 range. It's up to 42 now. Number of homes having price decreases holding steady as well here, and their inventory has been flat. Unlike Dallas, they really have not climbed. I mean, since July of 2021, they were about where they are now, which is pretty crazy considering the market action index has been dropping. So Last week they were 46.54, this week 46.07, almost no change in Collin County. But let's move on to my absolute favorite part. This is the top 10 ranked chart. Hottest and coolest both cities and zip codes in all of Dallas and all of Collin counties. We're starting here with the top 10 hottest cities. Carrollton, Texas remains in the number 1 spot. Louisville heats up 1. Richardson heats up 2. Grapevine cools off 2. Coppell cools off 1. Balch Springs and Garland remain. Grand Prairie heats up 2. Duncanville jumps onto the list out of nowhere, and Irving cools off 2 spots. So Duncanville actually knocked off Mesquite, which was the number 9 spot last week. Now we like to zoom in and look at specific zip codes. These are the hottest zip codes in all of Dallas and Collin County, starting with Garland 75041, Carrollton 75006, Carrollton 75007, Mesquite 75150, Grand Prairie 75052, Richardson 75082, Louisville 75067, Grand Prairie 75050, Richardson 75081, and Plano 75075. And I want to remind you that both Dallas and Collin County, their market action index is like a 46-47, so you can see that these specific cities are quite a bit hotter than the overall county. This zip code in Garland is all the way up to a 73.44. So it's definitely important to zoom in on both the city and the zip code outside of the county. Now we're doing the same thing with the coolest cities and zip codes, starting with Leonard, Texas. It remains the coolest, and it is moving further into a buyer's market. Remember, 30 and below is a buyer's market, so Leonard is the only place in all of Dallas and Collin counties that is a buyer's market. Followed by Ferris, which cools off 1 this week. White Wright heats up 1. Sunnyvale, Blue Ridge, and Salina remain. Rockwall cools off 1. Van Alstyne heats up 1. Anna jumps onto the list at number 9, and Red Oak remains at number 10. So Farmersville went from number 9 last week to entirely off the coolest cities list, being replaced by Anna, Texas. Looking at the coolest zip codes, we have Leonard 75452, Ferris 75125, White Wright 75491, Sunnyvale 75182, Dallas 75219, Blue Ridge 75424, Rockwall 75032, Salina 75007, Dallas 75208, Dallas 75203. And I also want to point out on the coolest cities list, this one is a buyer's market, but basically from here on, a 38 and up, even though they're on the coolest cities list, that is still firmly a seller's market. That's it for this week. Remember, if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. Just call, text, or shoot me an email. All that info is in the description below. Thanks for watching. I'll see you in the next video.